Hey everybody, Smart Silver Stacker here. Hope you're doing well. So it has looked for some time as though the dollar's days as the world reserve currency are numbered. But it seems as though President-elect Donald Trump has different plans, and his recent tariff threat against the BRICS nations could potentially prolong the dollar's reign as the world reserve currency, or it could backfire spectacularly, crushing US consumers and disrupting global supply chains. But one thing is for sure, in a world in which threats of economic warfare are required to defend the dollar status, gold and silver remain the ultimate hedge. So let's get to it. Did you know ST Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at stbullion.com/sweepstakes. Okay, so we know that the US dollar status as the world reserve currency is critical to the existing global financial order. It is the factor that allows the US to run up enormous debts and deficits, and it's also the factor that allows us to swap paper currency for goods and services around the world. The fact that you need dollars to buy things in international trade, the fact that you need them to buy oil, and the fact that you need them in reserve all contribute to the dollar's value. And it's also no secret that the BRICS nations have been steadily working over the past decade plus, but really in the past 2 years, this move has accelerated to undermine the dollar status as the world reserve currency. And as a result, President-elect Donald Trump has just issued a warning to the BRICS nations that he could impose 100% tariffs if they attempt to undermine the dollar. This is what he wrote in a recent post. The idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. They can go find another sucker. There is no chance that the BRICS will replace the US dollar in international trade, and any country that tries should wave goodbye to America. So the question here is this credible threat, is it just a bluff, and what could the potential outcome of such a move be? And there's a lot riding on this question, and that is why I think it is wise to hold some hard assets in reserve just in case. The need to hedge against a currency crisis, I think, is more real than ever before. Now, the BRICS nations were quick to respond to this threat. This is what Kremlin spokesman Dmitry Peskov had to say. More and more countries are switching to the use of national currencies in their trade and foreign economic activities. If the US uses force, as they say, economic force, to compel countries to use the dollar, it will further strengthen the trend of switching to national currencies in international trade. The dollar is beginning to lose its appeal as a reserve currency for a number of countries. And it seems to me that the key dilemma here is that the US may be trying to fight off de-dollarization with more economic warfare. It's kind of part of the problem that got us into this position in the first place. The use of sanctions and the freezing of Russian dollar-denominated assets is really what spurred the acceleration of de-dollarization. So will more threats of economic warfare do the trick here? But the market reaction to this news is quite fascinating. It looks as though investors are not really concerned about potential blowback from this threat. In fact, the US dollar index rallied sharply on Monday following this post by the president-elect. Of course, that wasn't occurring in a vacuum. There was also some political turmoil in France and the continued hollowing out of the European economy following the destruction of the Nord Stream pipeline and access to cheap gas. So there is a bit of euro weakness or bearishness on the euro that is contributing to the rally in the dollar. But nonetheless, the idea that the president-elect is making it a key point of policy to defend the dollar status seems to be making investors more confident in the status of the dollar, at least here in the short term. And here we can talk a bit about gold and silver's reaction as well. So it was interesting, yesterday on that sharp rally in the dollar, we saw gold and silver hold up remarkably well. I mean, both metals were slightly in the red, but basically just flat on the day, despite that significant rally that we saw in the dollar. And also both metals, if you look at the charts here, are at zones of significant support. Both of them are right at the upward trend line of the bull market that kicked off earlier this year. So it looks like they're consolidating. And today they're both actually in the green. So I am still remaining quite bullish on the metals at this point. And if the market reaction to this idea of defending the dollar with tariffs shifts and we see a decline in the DXY, I think there's a potential for the metals to really move higher, especially when you consider that, a BRICS currency, we've already been told by Vladimir Putin at the recent 2024 BRICS summit, which was hosted in Russia, that the time for a BRICS currency is not yet. It's too early to consider that idea. So what will the BRICS be looking at as alternatives to the dollar if they decide to continue to pursue their de-dollarization agenda? Well, it's going to be gold and silver. That's why the Russian State Fund announced recently that they'll begin buying silver for the first time. That's why there are rumors that China is secretly acquiring gold. That's why Russia has boosted its gold purchases, because you don't really need another currency. You just need gold and silver. They are the alternatives to the dollar. And those are the assets that the BRICS are looking at acquiring. Speaking of gold-backed currencies, of course, in the US, if you're looking for an alternative, you can pick up some goldbacks at goldback.com or upma.org. That is an alternative gold-backed currency that we already have circulating in the US. It's legal tender in several states, as soon to include Florida. Florida is going to be getting their own goldbacks in January, so keep an eye out for that. Now, one question that this whole scenario between BRICS one question that comes to mind following this exchange between Trump and the Kremlin and the BRICS nations is, what exactly is the red line for these tariffs to be imposed? Now, as Trump said in that post, a alternative currency would be a red line, but what about the more subtle forms of de-dollarization that are already underway? You already have Russia pricing their energy exports, their significant energy exports, in non-dollar currencies. You have the UAE, another new BRICS member nation, selling oil to India, the I in BRICS, in rupees. You have them selling gas to China priced in yuan. You have the Association of Southeast Asian Nations. They have been increasing their bilateral trade in local currencies and ditching the dollar for those exchanges. You've got Saudi Arabia discussing the potential acceptance of renminbi or yuan for their oil exports to China. And in China, you have now got the renminbi, their local currency, surpassing the dollar in their cross-border trade. So even without a BRICS currency, the de-dollarization movement is gaining momentum. So it makes me wonder just exactly what form of de-dollarization would trigger this trade war with 100% tariffs. And speaking of which, let's discuss some of the risks here, because I suppose if the BRICS nations see this and they become concerned and they halt their de-dollarization efforts, all very good for the US dollar. But should they continue and the tariff actually be imposed, think of everything that we import from the BRICS nations. This includes China, the world's manufacturing hub, where we get a lot of cheap manufactured consumer goods. And there's also raw materials, from Brazil. They produce a huge amount of foodstuffs. All of these BRICS nations, we import things from in exchange for fiat currency. It's a good deal for the US. But if a 100% tariff is imposed, that is going to lead to all of these goods becoming much more expensive. It is not, as some would have you believe, the exporters pay the tariff. No, they will simply raise prices to compensate for that, or they will find other buyers for their goods, other markets. And so if the bluff is called and this tariff is imposed, you could be looking at skyrocketing US inflation, and also such a move could potentially incentivize the BRICS nations to accelerate further their de-dollarization efforts to distance themselves from the US financial system. And considering the fact that the US national debt is now over $36 trillion and we are running massive deficits, the US seems to be in a precarious position in which a trade war and skyrocketing inflation should be real concerns here. Now, in such a scenario where we have a trade war and skyrocketing inflation and perhaps even an accelerated de-dollarization crisis, gold and silver will be the hedges, especially in terms of being priced in the US dollar, that could potentially soar. China is the world's biggest producer of gold. China and Russia are both major producers of silver. And if they do decide to de-dollarize, their acquisition of these hard assets, these tangible hard money assets that are outside of the financial system that aren't subject to sanctions and economic warfare, will accelerate as well. And there will be a rising demand for gold and silver. And that is why I think it is critical to hold these hard assets yourself in this scenario where the outcome for the US dollar is anything but certain and so much is on the line. So the real question here is, will the US dollar be protected by Trump's tariff threat, or will de-dollarization accelerate? Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.